I've got one more point, so if you indulge me for 2 minutes and then I'll shut up. The EIS, this is a glorious opportunity. The general concept and history. It was created as the Business Startup Scheme in 1981. It became the Business Expansion Scheme in 1983. What then happened was, in the early 90s, the government thought, what we need is a relief from capital gains tax if people invest in the right kind of company, and they introduced something called reinvestment relief. And then in the mid-90s, from the 6th of April 97 to be precise, they twigged that the rules on reinvestment relief and the rules on enterprise investment scheme relief were pretty similar. So what they will do is they'll amalgamate the rules. So what you have now is, under EIS relief, if you subscribe for shares in the right kind of company, or the right kind of shares in the right kind of company, doing the right kind of trading activity, you get income tax relief for doing so. The shares that you've acquired are capital gains tax exempt, and if you have triggered a gain, you can get shelter on that previously triggered gain. Okay, that is the point. If you want the most superb CGT planning idea, here it is. I'll tell you it. This is my last point, so enjoy it. It is perfectly possible for you to create your own EIS company. Let us say I own 100% of Wood Enterprises, which is a fabulously profitable trading company. And I think if I sell Wood Enterprises, I'm going to get stung for a huge amount of capital gains tax. I don't like that idea much. I know what I will do. I will create, with my friend, a second company which will do a completely unconnected trading activity. We will go out and we'll open a hairdresser's shop or something. I will have 30% of the shares in that company, because that's the most I can have to qualify under the EIS. My friend will have 70%, but my friend knows that when the time comes, he is going to take a dive. So we start the company. I qualify for my EIS relief. I might get a little bit of income tax relief, but crucially, if I keep my nose clean, go through my qualifying periods, the company does the right thing, my shares will be CGT exempt in perpetuity. Very, very valuable. So we do this. After 3 years, because the qualifying period is now only 3 years, I say to my friend, this hairdressing lark, it's a load of old rubbish. We're not getting anywhere. I suggest we cease trading. I suggest you are bought out. I will take the company on going forward. I'll use it as my personal investment vehicle. So I will buy in his shares. So my 30% now is 100%, but they're still my original 30%. The company no longer has to do any kind of qualifying trade. It can do what it likes. What might I then do? I might think, I've got a good idea. I need a holding company for my trading enterprise. My trading empire needs a brand new holding company. I will, by way of share exchange, put my holding company on top of my trading company. And I will issue a tiny number of new shares to myself in consideration for my trading company shares. So going forward, I've now got a holding company, the shares in which are largely capital gains tax free, but a tiny, tiny proportion are not. And then what I do, I sit tight. I keep trading, and then in due course, somebody will come to me and say, Mr. Wood, we think Wood Enterprises is fabulous. We don't much like the name, but the principle is brilliant. Take this huge sack of money, and I will say, oh, I'm not selling Wood Enterprises, I'm selling Wood Holdings, which is my EIS company. And that makes my gain tax-free. And that is what they call the envelope trick. I have enveloped my chargeable asset into my CGT exempt EIS company, which no longer has to do any kind of EIS qualifying trade. It can do whatever it likes. There you are, that's the end.